Hello everyone. Welcome to the analysis of Mid Cap Nifty. The index has been launched very recently, and although the index has been playing, for a very long time, but then it is open for retailers very recently, and the index is slowly picking up its momentum. The volumes are increasing, and what's so interesting to note here is that we already have certain definitive patterns in a longer time frame which can play to our advantage if we capitalize it in the right moment. So let's look at what has happened in mid cap nifty. We have an 1 hour time frame here chosen, and in 1 hour time frame I see that an inverse head and shoulder pattern has been formed. An inverse head and shoulder pattern is a upside breakout pattern indicating the targets, potential targets to the length of the head. However, I would also like to consider the shoulders as the subsequent targets because the nature of head and shoulder is that although head is considered to be the target, personally I consider the shoulders to be intermediate targets. And you have the different shoulder lengths here, which is from here to here. We can measure, and that's coming to 967 points. The target one, assuming that the right shoulder target to reach 8,775, and the left shoulder target gives us 9,154, and the head target is at 9,568. So these are the three different targets in the long run. um, this is valid because we are considering 1 hour time frame, which is quite substantial when you consider some sort of patterns like head and shoulder. And potentially this can happen between 3 months to a year time frame. It's quite long, but the bullishness is resonating very well in the kind of moves that we are seeing. Also, what we have is for the short term, we can also get into this 15 minutes time frame, and as you can see that a channel has been formed from June. You can see that the channel is formed and it's trading within the channel. It looks like an ascending channel, but what we have to be watchful about here is it started off with a nice move and then it didn't even breach the 50% level. It continued to rally up, and then suddenly it came and then hit the base of it. Again, it rallied up. Again, it came to the middle of it. Again, it rallied up. And as you see, the subsequent peaks are like decreasing. That is something to be watched out for, because if it is not going to touch this trend line, and then this particular decreasing lower ice is going to be a point of concern, because if it breaks the trend line, then we might have a small correction to the levels of 7,800 levels. So on a weekly basis, this zones can be played along, and you can always extend these lines as the trend progresses, and keep a watch on whichever side that it breaks. We are in for a either correction or a target of a T1 we can expect it to achieve. So since it's a new index, there is not much of data available, but all I can say is that the volume has been consistently increasing over time. You can see that the volume is like picking up very nicely. That's a very good thing. And since it's a Monday expiry, and then we have also long, it becomes like, Saturday and Sunday, and Monday is the expiry. So 3 days of erosion, that is a great news for, writers. So this is one index that can be, looked at for option writers as a potential gain, right? And as it unfolds, we will see how the volatility plays out, how good it is in terms of for buying. And just this week we are starting off with the analysis, and as we progress further, I will keep posting more updates. Thanks.